Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions and any questions you might have. This is my brief bio. I was Executive Vice President and Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab. Started Tradespoon in 2012. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics. I'm going to go through some specific trading examples. Very important to look at the disclosures. Trading stock and options involves risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor CC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. If you're new to Tradespoon or if you're new to options, I encourage you to review optionsclearing.com, this link, to understand the risk associated with trading options. All right. Before we get into a specific trading plan, again, very important to let's talk about market condition, right? We have basically, what do we have today? Unemployment numbers, right? Better than expected, more than 500,000 jobs created. Look like, I think we're pre-pandemic level, or actually better, right? More people are employed or now that they were prior to pandemic. So all the jobs were restored. We still have 2 to 1 ratio between people looking for a job and jobs. Let's see, has this been updated? So estimate 258,000, 528,000. So just kind of incredible numbers. Unemployment rate dropped to 3.5%. Still, average hourly earnings continue to go higher, and labor participation looked like, I think it was, at least what I saw, was a little bit below, or slightly below what was expected. So great numbers. Market, as a result, was down. I mean, it was lower originally and kind of restored. Kind of trading below, so at session high, right, off of session lows. And again, why? Main reason I think is again the idea that you know, everybody's employed, or everybody who wants to be employed is employed, and there's still wage pressures, right? So good news for the economy and good news for Main Street. But unfortunately, that is not going to help with the inflationary pressures. And you see very strong jump in yield, right? We've seen this downward trend. We're from 2.5, we're back to 2.8. And again, steep yield inversion, right? 2-year yield is almost at its high, getting close to its high. 10-year yield is underperforming. So yield inversion, and the yield is inverting more and more. It was 10 basis points, 20, 30, now it's 40. I think it was even more. I think it was close to 50, 45 points at some point. So yield inversion, and yield inversion, usually is interpreted as a sign of that the recession might be coming, right? People who believe in soft landing, they say, well, what kind of recession can you have when we have such a low unemployment numbers? And bears hard landing just say this is just a matter of time, because the Fed, the only way to fight the inflation and the wage pressures and rent pressures and housing pressures is demand deceleration, and the demand will be significantly slower. Dollar rallied off of its low. Looks like it found the support. It pulled back and kind of rebound, trading in the box, and spiders are trading in the box, right? So the main question is, the first question, the most important question is, is this the bottom? My handwriting was never good, so. Not a philosophical question, more of a, you have to kind of, if you think this is the bottom, right, then there's, there's still a chance that market can drop 50 points, 15%, but then, market can rally, 20%, right? So then the risk versus reward makes sense kind of to pursue this rally or continue to add on maybe on pullback. But, if you don't think that this is the bottom and we might be, heading lower or retesting this, then maybe risk versus reward does not make sense, right? So this is the most important question. Plus, this is going to help you determine your stop levels, right? With the position size, right? If this is the bottom, your position size should be bigger, and if this is not the bottom, then you need to adjust for that, and then your position size should decrease. So this is, to me, number one question. Do you believe this is basically soft landing or hard landing? The way the the media describes this is soft landing versus hard landing, right? Will Fed continue raising interest rates until the economy will, slow down, or will they, pivot sooner than later, and and then the economy will continue to chug along? So that's the first question. Let's, I asked that question yesterday. We have different audience today. So I'm going to ask this question again. Say, just type in yes if you think this is the bottom. Maybe it's a little bit higher, maybe it's a little bit lower, but we're not going to get much lower than 360, maybe 350, maybe 370. But this is the bottom. And say no if you don't think that this is the bottom. Or you can say soft landing, hard landing, however you want to describe this, whatever makes it easier for you. Faust, hello. Dan, hello, good morning. Present. TLT is down. Thank you. Trader. Dan, yes, this is the bottom. Trader, no. Anyone else? Andre, Aladdin, Clayton, David, Dan, Faust, James, Kevin, Patrick, Pierre, Sean, Tom. Bravos, MOH, Abdullah, Tom, Irina, and Logisolve. Unlikely. All right, anyone else? Well, I assume everybody else doesn't know, right? It's either doesn't know or just doesn't want to participate, right? Those are the other two choices. All right, so I'm in the camp that this is no, right? So my answer is no, this is not the bottom, right? So then the next question is, obviously we're going through consolidation, very similar price pattern, right? Very similar price pattern. We've seen this consolidation, right? Usually heading into the CPI print, right? Market trades sideways into CPI print and then it drops, right? We've seen it over and over this year. And it's a very similar pattern again, right? Kind of day 1, day 2, day 3, day 4, day 5, day 6. And then we have Monday, Wednesday, and then CPI print Wednesday and PPI print CPI. So there's two things most likely it's not going to stay here too long, right? It's either going to rally, right? Continue to rally. We haven't had that this year, but it could happen, or we pull back, right? So this is scenario number 1, right? Going into September. Scenario 1, we're starting this pullback, and scenario number 2, we continue to rally. I don't know. We are at 413, right? 20 points to the upside, right? We can rally 20 points to the upside, another 5%, or we can quickly drop 20 points to 390, right? Scenario number 1. Scenario number 2. Also important question, right? Short term, what do you do as a short-term tactical trader, right? We are in the bear market, right? With at least as of right now, pattern of lower highs, lower lows, down more than 20%. By definition, we are in a bear market. So it's either a rally in the bear market, which is coming to an end, or this is just a resuming the continuation of the bull market. So market after the CPI can go up 20 points, can go down 20 points. You need to decide, right? Do you want to just be market neutral right now? Do you want to be bearish? And do you want to be positioned, right? You have to always think about portfolio composition. I encourage you to have only 4 positions at a time. And we'll talk about this later, but assuming you only, right now, everything is very highly correlated. It probably doesn't even make sense to have more than 4 positions. Right, unless you're doing long-term investing and you hold in position for a few years. But if you're not long-term investor, then in you active trader, short-term, medium-term, couple months, couple weeks, I would say 4 positions. But you have a choice, right? You can have all positive, right? You can say, all my positions are positive, right? You can say, maybe slightly positive, maybe slightly, want to hedge with 1 short position. You could be market neutral, right? Or you can be, slightly, bearish, or you can be extremely bearish, right? Those are your choices. So the question is, out of these 5 compositions, what should be your composition? And if you say 2, then it's obviously, 1 or 2 or maybe 3. If you say 1, then it should be, 5, 4, or 3, right? Those are your choices. So how many of you say 2? Just type in 2. After the CPI print going into September, we're up another 5%. Or after CPI print, we're down 20. So scenario number 1 or scenario number 2? Yeah, down when I say bottom is referring to the low of this year. Yes, so I think we will break the low for the year. It might not happen this year. I'm actually positively surprised by the, this is the strongest rally this year, and on the, earnings are better than expected. So at this point, this year we're probably not going to break this low. We might marginally break this low, but that all that means is that it's probably going to happen next year. Maybe first or second quarter of next year. That's my opinion. So all right, 2 done. 2. All right, trader 1 done. Thanks. Anyone else? We have a lot of people today, but not a lot of participations. Is everybody on vacation and just doesn't want to deal with this? It's inside of the question box, so just type in 2 or 1. It's an important question. If you're trading, if you're investing real money, you need to answer these 2 questions for yourself. I encourage you to keep a journal, write down these questions in your journal and answer them, right? Because, if you're trading in the current market conditions, you have to have an opinion on this. If you don't have an opinion on this, then, then you just follow my opinion, I guess. That's another choice. You can just follow your opinion, or just, be difficult for you to trade in the current market. Anyone else? All right, Patrick, Peter, thank you. All right, 2 1s. All right, so we're 50-50, right? We're 50-50. I'm gonna go with 1, right? My choice is 1. I'm, sure. I think market is overbought. I think we will pull back. But it could happen. Maybe not 20 points, but we might reach 420, right? We might, we got to this, we got to this overhead resistance level, right? Kind of a double top. Maybe CPI will be better than expected, a lot better than expected, and then we might get to 425, 430 level, similar level we were in the May high. So it's either June high or May high. We'll see where we are. But I just, my answer is 1, because for the yield inversion, and I'm not sure how else we can fight the inflation, except keep raising interest rates. Okay. So the next question is whether you're bullish or bearish, right? You have to at least consider, the trading is about having an opinion and investing based on your opinion, right? If I think, we're gonna go to 390 level, right, in the next, let's say, months, right? By middle of September, we'll be at 390, right, or worse, right? Then obviously my portfolio composition is, maybe I have 3 short and 1 long, or right now maybe 2.5, right? 2.5 and then 1.5 position, right? But I have to think about stop losses, right? And position size. So again, I propose 4 positions times 2.5% of account value as your stop loss. Most common question, why 4 positions? Why 2.5%? And then what do you do with the rest of the 90% in cash, right? If you're trading options. So we'll try to answer all these common questions. Why 4 positions and 2.5% of account value? Well, the idea is you have to, the most important, in my opinion, especially when you trade in the bear market, market is going to move very quickly, right? You're going to have these 15% rallies, right? And then you're going to have these 20% pullbacks, right? So this usually continues in every bear market. The question is, how long is the bear market? And usually nobody knows. We can say average bear market lasts, whatever, 12 months or, 18 months. But, nobody knows how long this pattern will continue, but it will continue if this is a bear market, right? By definition, it should be lower highs, lower lows, right? So 4 positions, 2.5%, I'm trying to predict how I will behave when the market, if and when the market drops, let's say the next 20%, right? The next drop is, going to be at least, 15, 20%. If this is how I envision. So, and whether you're bull or bear, you have to at least consider the scenario, right? If you're bull, you should at least consider scenario of hard landing. There's a lot of solid evidence that that can happen. And if you're a bear, then, well, you should consider the opposite, right? That we might, the bull market can resume. In both cases, right? If the trade is going against you, how will I behave, right? So what is kind of future rehearsal exercises, right? You call them negative rehearsal, negative scenario. So it's a very popular strategy, and you can read them in self-improvement books. You can read them in trading psychology books or in just general psychology, corporate. When you deal with corporations or executive management. When you're managing your company or you're managing trading, you treat it as a business. You have to think about, you have to get very good in predicting, right? Predicting, right? You can't really manage your own company if you cannot predict your future cash flow, right? Your company will go bankrupt, right? So you have to, you don't have to be exact, right? You might be off, but your brain has to be conditioned that you always try to predict, right? Trading is no different. You have to try to predict your cash flow, right? If, let's say I'm short, right? Let's say I'm short, right? I'm short at this level. I basically have to predict what will be my cash flow, or what will be my drawdown, right? This is a portfolio drawdown. How much cash will I have, and how much my portfolio will be down if this is a soft landing, right? If this is a soft landing and we rally, let's say, we break, let's say, this level, right? I don't know, 450, right? So let's say this is my stop loss, right? Longer term, I think, we either getting, retesting the lows or we retesting the highs, right? So that would be the 2 scenarios for the end of the year, right? So let's say we get to the 450 level. How will I feel, and what will my cash flow look like, and what would my portfolio drawdown look like? If I have 4 positions and I structure them with 2.5% loss per account value, I propose whatever your stop levels you decide. Let's say you put 450 is the worst case scenario. If you're more bearish, maybe you put this downtrend, right? We have a downtrend from January. Connect, next point could be here, right? It could be somewhere in here, right? By middle of August, maybe we chop a loan, maybe we get something like this, So I need to predict, I can say that 430 is my stop loss, right? That's the worst case scenario. Maybe you can say, no, it's 450. And that will determine your position size. But I encourage you to have 4 positions, and whatever your stop loss, whether it's 450 if you're bear or if it's 430 if you're bear, your stop loss should not be, you should not risk more than 2.5%. Let's say I'm going to say 430, right? There is no way we're going to break 430 level. I hold the position for weeks. I'm putting this as my stop loss. We're trading at 413, 433, my stop loss, it's 20 points. Right, so if I'm going to go short, right, if right now I'm selling short, right, I'm selling short at this level, my risk is 20 points. And then 20 points, 2.5%. Why 2.5% of account value? Well, the reason is because ARK moves faster and Bitcoin moves faster than spiders, right? Bitcoin is up 4% and spiders is down 30 basis points, right? So they don't move 1-to-1. That's why instead of always doing 2.5% of stock value or 4%, I encourage you to think about cash flow and your position size, right? Not come with the percentage point or absolute number, which is even worse. So I'll encourage you to look at the account value. So 4 times 2.5, 10%. And then I close my eyes. I imagine we are, end of September. People go back from the vacation. Everybody's working, go back to work. And market, I sold short, and market is at 440, let's say, right, somewhere in here. And I'm out, right? I'm down 10%. Right, so if I'm down 10%, usually that's not my trigger in terms of fight or flight, right? My goal is, my personal goal is to avoid fight or flight response, right? Fight or flight response or stress response is triggered by a release of hormones, either prompting us to stay in flight or run away and flee. I encourage you to keep a journal. If you've been trading, more than a couple of days, I assume you've experienced, most people, they have, parasympathetic system, sympathetic system. You have some kind of a biophysiological response when the market moves beyond of what you expected, right? The famous saying, I think it's Warren Buffett, the market can stay irrational longer than you can stay solvent, right? So usually when market stays irrational for you, right? Maybe not for other people, but for you, if it stays longer than irrational, it triggers some kind of a biophysiological response. Now, how many of you have experienced this biophysiological response in trading? Chuck, I'll go over the support resistance. Thank you, Kevin. Appreciated your comments. All right. So how many of you say, yes, I know what you're talking about. I have seen this response. I've experienced this. Nobody? You guys are just very low participation today. Yes. Okay, at least we have one yes. Must be something was August. All right. So, okay, trader. Thank you. Can I see that? Who's that? Two Wegelners, fight or flight. Thank you, Chuck. All right. Some physiology lessons. Peter. All right. Thank you. Yes. Okay. So a lot of people you said yes. So my goal is not to experience that. We all have different triggers, right? We all have different portfolio sizes. We all have different backgrounds, different demographics. So I don't know what that magic number. For me, it's 10%. Right? I know 10%, I'm going to start getting a little bit nervous. If it's 20%, I'm going to trigger this fight or flight. So where did it go? So if it's 20, if my portfolio is down 20%, usually that's my fight or flight, and I don't want to get into that point. So when I structure these stop losses and number of positions, I do this with in mind that to make sure that if my opinion is incorrect, right, and the trade is going against me, then it's 4 positions, 2.5%. I think these are good averages. For some people, maybe it's 6 positions and 1.5%. Maybe for some people, it's 2 positions and 5%. But I think this is the most important rule. If you can get number of positions correct, right? The only thing that I encourage you to get out of this presentation, except the vagal nerve and parasympathetic and sympathetic nervous system, is number of positions, position size, right? You might not remember, fight or flight response. Maybe you're not going to remember what yield inversion means, and that sounds foreign to you. But number of position and gaining number of position size correctly, to me, this is the only formula for consistent results in trading, right? You want to start thinking about, my favorite saying right now is, analogy is, and we can see more information on the site, process versus outcome, right? I have a lot of videos on this topic, right? I mean, there are 2 types of, you can do these psychological tests, right? Brigg-Myers, right? One of the famous Brigg-Myers tests. We all wired differently, right? We all have different DNA, and we all wired differently. We can have 16, types of personalities, maybe, 4 types of personalities. We did this test where they would divide all people into 4 categories. You're either eagle, right? You're either eagle. Birds, right? You're either eagle or you're a dove, right? Or you are owl, right? Owl. Or you're a peacock. So based on these personalities, obviously, your thought process and your decision-making process is different, right? It's different how eagle is probably, or very process-oriented, right? Where peacock is more of a outcome-oriented, right? So we all wire differently, but for trading, it's important to be consistent, and it's important to be process oriented, because and the analogy is weight loss, right? I'm overweight. As long as I remember myself, I always tried to lose weight. And I know when I was young, the idea was, set the goal and say, I'm going to lose, 5% of my body weight, and I'll do it in 3 months, right? Very aggressive goals. And usually I would always achieve those goals. And then what happens afterwards? Once I achieve my goal, I relax, and then I gain all that weight back. Why? Because I'm outcome oriented. I'm willing to sacrifice the process. I'm willing to not eat nutritional food. I'm willing to, over exercise my body to achieve the goal. And then afterwards, as soon as the goal achieved, rinse and repeat, right? I gain weight back, and, and then it's up and down, up and down, up and down, until, as I get older, I realize that unless I build the process in terms of, when I eat, how much I eat, how much I drink, how much I exercise, I have consistent schedule, consistent sleep patterns, that's the only way to achieve the long-term goal, is to be very process-oriented and not deviate from the process, right? I cannot lose weight if I don't go to bed early and don't get enough sleep, or if I exercise Monday, Wednesday, and Friday at 9 a.m. and not, you have this cycle. What is it called? There's a cycle in your body. What do they call it? Body cycle. Give me 1 second. Oh, my doctor's body cycle was. you guys know, Chuck, what's the body cycle that our body follows for sleeping, for exercising? I forgot. But anyway, we all have cycles, right? So it's important for us to go to sleep at certain time, to eat at certain time, and exercise, right? And not do it in random times. So trading is the same thing, right? You have to be process oriented. The idea is to put on always the same number of positions, always the same position size, always the same portfolio drawdown, always look for the same kind of pattern or signal. You're finding your favorite signal, trading setup, trade small, trade often, rinse and repeat, right? And you have to concentrate on the process, and outcome will be there, right? It will arrive. If you just concentrate on outcome, you start trading, you have $5,000 and you say, I'm going to make it $10,000, right? I'm going to double my money in the next 3 months, right? That's usually how it starts. You may or may not achieve this goal, but after you make that $5,000, your goal would be to go from 20 to 40,000, from 40 to $80,000. And at some point, you will, get caught in this bear market, right? Or the great scenario was during pandemic, the Wall Street mavens, this idea of trading cryptocurrency, buying options. A lot of people made a lot of money, right? But statistically, 90% of these people, they lost all of it or more, right? Because they were making this money, they were concentrating on outcome, not concentrating on the process, and at some point it ends, right? You can only lose so much weight until you gain it all back, unless you change your habits, right? Trading is the same thing. You might make your goals, but unless you have a process and a discipline, at some point you will get caught, right, in this race, and you will lose all your money. So I encourage you to concentrate on the process. Process means keep a journal, right? You keep a journal, you document all your trades. To me, process means waking up early, reading news, right? Following the news, following the newsletters if you follow Tradespoon newsletters, and grade yourself. Be honest with yourself. Now, it's very important to put your ego aside and use, emotional intelligence, right? That's my new favorite, not new, but favorite expression, right? Self-aware. You have to be self-aware. You have to document your decisions, and you have to grade yourself, right? You put A and B. If you follow the process, you did not deviate, but you either made money or you lost money, or C or D, right? If you very outcome oriented, but you sacrifice the process, right? You had too many positions, or instead of 2.5%, you did 10% stop loss, then C or D, right? So it's important for you to go through these habits and grade yourself and keep a journal. So that's the reason for 4 positions and 2.5%. And this is how you would determine this 2.5%. In this example, it's 20 points, right? If I sell short at 413, and my stop loss is 434, 433 is down 20 points, I encourage you 2.5% of account value, which is $250. So the first step is cash, right? And then figuring out what is the maximum amount you're willing to risk per trade. I propose on a $10,000 account, you never risk more than $250, which is 2.5%. You have 4 trades, they all 4 go against you because you're on the wrong side of the trade. Okay, you're down $1,000 out of 10,000. If you're down more, most likely you will trigger fight or flight at some point. Maybe one time you will get lucky and it will get to 440 and then it will drop. But the second or third time you're not going to get lucky and you will lose more than 20-30%. So 4 positions, 2.5%. This is number 1 rule. And for different people, it might be different, right? This is average. For some people, maybe it's $100. For some people, maybe it's $10,000. It just depends on how much money you're managing. But I know average account in Tradespoon is $10,000. Average account for day trading is $25,000. So in both cases, whether you're doing day trading or longer term trading, on $10,000, $20,000 account, it's $250. You never risk more than $250. So that's rule number one. Rule number two, I believe we are in a bear market. You should have 50% of your portfolio in cash. Especially if you trade in options, especially because stocks, it's a little bit more forgiving, right? You buy Microsoft, fine, you're going to run out of cash, but Microsoft at some point will be longer. So a lot of people just buy Microsoft and they're just going to wait for the next couple of years, which is fine. But if you don't want to wait for the next couple of years for Microsoft to make new highs, then I propose 50% in cash, right? 50% of your portfolio in cash. Any questions? So those are the two things I want you to get out of this. Rule number one, always the same position size. Number two, 50% in cash. Everything else should follow, right? Something to consider: negative scenario. Always determine your stop losses before you enter the trade. Document them, right? And grade yourself. And then you can build routine, then you can become disciplined, and then you're going to be more process oriented. If your personality is peacock or dove, maybe it's hard for you to do that, right? Just innately, it's hard, right? For my wife, she's probably a peacock, right? Just don't tell her I said that. But for her, she hates process. She only cares about outcomes. It doesn't come naturally for her to have any routines, right? She feels like it suffocates her. And I get it. That's why she doesn't trade, right? And she probably can never be a good trader. Not never, sorry, I should not say never, but it's going to be extra effort for her to build these routines and become process oriented. So you just need to work harder. I misspoke. It's just if your personality is peacock, you have to put a little bit more effort, right, to become a disciplined trader, and just work a little bit harder on yourself. Just like I always have to struggle with my weight, and my wife never does. No matter what she eats, she's always skinny. Okay, so just the way it is. But it doesn't mean I cannot lose weight, right? I mean, so that's the same analogy. All right. Any questions? Okay, let's go over the questions right now. The green Chuck. Okay, what short strikes would you set up on Spider Iron Condor today with support resistance now? Chuck, I need time frame. Are you trading? Are you thinking about end of next week? Are you thinking about end of September, October, December? I don't know what the time frame is. But in order to identify resistance levels, this is clearly resistance number one, right? I assume we're going to trade, and something has to happen. Maybe CPI print 5, right? If CPI is 5 or even 6, then we're heading this way, right? Otherwise, we're heading that way. So this is obviously resistance 1, which is a very strong resistance. It spans over multiple months, for almost 6 months. This was March low. This is May, June high. Something has to happen in the market for it to break through this level. The next level of resistance is, this downward January downtrend, right? January downtrend and the May high, right? So that's resistance number 2. So depending on your time frame for Iron Condor, this is a strike price, or a little bit higher, maybe 420 Iron Condor. You want to sell 420 call, 440 maybe. Or if you were a little bit more cautious and you think R2 can happen, then maybe you sell 440, 460, right? The further out, the less money you're going to get. But ideally, you want 30% this width of the strikes. So those are resistance levels. For support level, obviously this 406 is your first support, very short term, very weak. Much stronger support would be 390, right? Support 2. And then or 370. So those are all candidates for strikes for Iron Condor. And maybe put spread, you wait till these levels are broken. If you have a conviction that the next leg is this down, then maybe you sell call spread, and then you would sell put spread at least when we break through the 406 level. So Chuck, hopefully that answers. So 30-60 days, I'm bearish. So obviously I would, I think I already have a QQQ call spread. So but I would choose 430, 450 spread. 430, 450 spreads with the idea that we're not going to break 450 level and get 30% the width of the strikes. All right, so how do you trade? First, few announcements. One is I need you guys' help, and if you think that this is useful information and it benefits you in trading or in life, maybe now you're finally gonna lose weight like I did, follow us on YouTube. Do me a favor, we're trying to get to 1,000 subscribers. It will help us do the marketing, and so we're trying to grow our community, right? If this information was useful to you, then most likely it's going to be useful to other traders. So hit the subscribe button, hit the like, that will help us promote and these videos. And if there is a certain video that you like, right? On Monday and Wednesday we have a live trading room. I encourage you not to trade alone. I encourage you to participate in this live trading room, because we have a lot of traders that are experienced traders, a lot more experienced than I am, right? They've been trading longer, they're, managing others people's money, and they ask excellent questions and they have excellent trade ideas. This is where you can participate without any financial commitment. There's no financial commitment. You just subscribe to our channel, you join us when the market opens or the last hour on Wednesday, and you can participate live, ask questions. I will review any stocks. I never judge. We're here to support each other, and I think this would be a good experience. If you like these videos, please, take the link and share. If you're part of any forums, if you're part of any, I don't know, Facebook groups. They have a lot of Facebook trading groups. Maybe on Wall Street made them. Then obviously they have millions of subscribers. Share, just say, hey, I like Vlad's jokes or something along those lines. That would be greatly appreciated. Also, I was born in Ukraine, right? This is an extremely important topic for me. I was born in Kiev. I'm a part of the team, part of the board of directors, and we are raising money for kids, right? There are millions of displaced families, millions of kids. So we build a site so you can directly pick a family, right? You can select which family you want to donate and which kids you want to donate, and you can donate $100, per family. That's our process. We approve 24% of families and $100 donations per family. So gate.org. I'll put that link. If you guys are able to do that, that would be greatly donate. It will be greatly appreciated. And kids, actually the interesting part, we always, half of the families will actually send you a note, and you can pick a family, and they'll send you a note saying, thank you, David called, right? The family will tell you, if you pick the family, they'll send a screenshot. So it's a very touchy, it's a very sensitive subject for me, because I have family in there. So gate.org, and I'm gonna put that link inside of the questions. Okay, so those are the couple announcements. And now, what's my favorite strategy? So again, Chuck already alluded this. Sell-in premium, right? Right now, what works, VIX is above, even though right now you have to be careful because VIX market is very complacent. VIX is at 20, right? That's the historical average. It's been above 20 throughout this year. It kind of pulled back to its lows. So people are complacent, right? All that means is that majority of the people believe that we are in soft landing, that Fed will stop raising interest rates sooner than later, right? Complacency. Being emotionally intelligent is extremely important, because we go through these labeling exercises and we would say, what is the one word that describes how I feel? If you feel like complacent or relaxed in trading, that might be an issue, right? Maybe it makes sense to, when everybody's complacent, you buy your hedges, right? When everybody is panicking, maybe it's time to start buying stocks, right? So that's kind of, always observe your emotions and feelings. So VIX is low. Iron condor, you just have to be careful. But again, especially with earning strategies, today example DBX, right? I sold DBX put. Let's go over this trade yesterday, right? Iron condor. Chuck asked 30 to 60 days. I know earning strategy, some people do 30 to 60 calendar spreads, very popular strategy. I do it a little bit differently. If you do 30 to 60 days, you have to wait longer. You only have 4 positions. You buy DBX, you might have to wait, a few weeks or a few months until this trade is over. So I'm a little bit less patient. I'm taking a little bit more risk than if you do calendar spreads. But it's a well-defined risk. So this is an example of iron condor, right? I sold 26.5 call, sold 21 put. I collected 13 cents and closed the trade, right? Immediate question, people send me emails or support ticket says, okay, Vlad, you made 13 cents, right? That's one contract. It's $13, right? So you know what, $13 is, I pay for coffee more than $13. That is the most common mistake, right? To think, not that you're paying $13 for coffee, but that you think that you just made 13 cents, right? If it's a $1,000 stock, right, and you made 13 cents, okay, fine, I would agree with you. But if it's a $20 stock, you have to calculate what 13 cents. 13 cents out of $21 stock, this is a 0.5%, right? You just made 0.5% holding position overnight, right? First of all, tell me where you can invest your money and get 0.5% return a day, right? So that's already should kind of spark curiosity. And then the idea of, the third thing that I want you to get out of this presentation is compounding investment, right? Unfortunately, a lot of people are asking me, Vlad, tell me the stock that you think is going to triple, in the next few months. And usually I will tell them these 10 baggers, triple baggers, whatever you want to call them. This is not, I don't look for home runs, right? Some companies do. Some people say, well, this is a new company. It's going to revolutionize the industry. Maybe in the bull market, maybe it's a good strategy in the bull market. In the bear market, most of these companies have negative cash flow, and then the better question is, how long will these companies survive? Like, how long will Beyond Meat survive, burning $100 million, in cash if they have $1 billion in their balance sheet? Well, the answer is, 10 to 12 months, right? And who's going to willing to give them new loans, right? With the new, high interest rates rising and, sentiment at historical lows, right? So this is probably not an environment where you look for home runs, right? Even though I like home runs, there's nothing wrong with home runs. It's just as I get older, I realize it's hard to do home runs. But single hits are also fine, right? 0.5%, it's a single hit. And the way I look at this, let's say you do 5 trades every day. You do earnings. There's more than one company announcing earnings. Obviously, earnings season, the earnings almost every single day throughout the year. There's some companies announcing earnings. There are some weeks where there's a lot of companies. There's some weeks there's only one company. But let's say 5 days a week. Let's say right now the percentage correct is 90%. So let's say you did 4 trades based on past performance, right? That doesn't guarantee you the same results, but let's assume past performance. So you have 4 trades where you made 0.5%. Let's say 1 trade you lost 1%, right? Or 2%. So 4 times and a half is, let's say, 2%, right? So you made 2%, 4 times a half, 2%, and 1 trade went against you. Let's say you lost 1%. So, and that's your goal. Let's say, so that means in 1 week, you made 1% return, right? If you just do 1 trade a day or 5 trades a week, however you want to do this. If you do it in a month, right? If you convert this into a month multiplied by 4, then you made 4%. And if you multiply it by 12 months in a year, that's 48%, right? If you can do 48% return or 24% return, you're a superstar in a bear market. Very few people are able to do this. So compounded investment is an extremely important concept in life, right? If you want to improve your relationship with kids or with your spouse, how do you do this? Do you just, it's compounding investment, right? It's the, you know, taking them out, buying flowers for your spouse, taking your kids to play golf. You know, these little investments, they will compound, right? So whether it's a relationship or trading, it's all about compounding investment. Original trade, so I'll go over. All right, so I encourage you to do compounding investing. Question was on iron condor, so I'll share my position in QQQ. So in QQQ right now, again, if you sign up for Elite Circle, you get access to all my trades, whether it's short-term iron condor or long-term iron condor, or if it's a hedge, hedge with SH positions. So I do buy both stock and options. QQQ. So I have 330, 350 call spread. Expires in November. I sold 330 call, bought 350 call. I did not do a put spread because I think it's too early to do a put spread. Eventually, as market pulls back, I will lag into the put spread. But for now, I actually closed my put spread. I had a put spread. I had a credit put spread. I closed it because market rallied. I put it when the market was, let's see, when did I put it? QQQ, last 60 days. So I closed the 260 put and I closed 280 put, right? I had a calendar spread. So when market reached 280, when QQQ reached 280, right? I said market is oversold, so I put on a put spread, right? And now in August, I said, okay, it's overbought, it lost most of its premium, I'm out of this put spread. But now I did add on the call spread, right? 353 call spread. So I sold it for $5.50. Right now it's trading at $8. With the idea that QQQ, 330, 350, I think that's the worst case scenario for me, right? It's a bearish trade. I think maybe we'll get to 350, unlikely. I think again, we're gonna start losing momentum, or, well, actually starting now. All right, any questions? Chat, let me know if I answer your question, right? So 330, 350, and again, I encourage you to consider sign up for Elite Circle. We give you 30-day money back guarantee. You can participate morning bell, closing bell. You have access to all my positions. And notice real time. You can hit SMS alert, enter your phone, and you will be notified within not even seconds, milliseconds, no seconds. 1 or 2 seconds after I do the trade. And this is not hypothetical trades where I put it in my Twitter account and you guys get it. This is actually through an API connected to my broker-dealer account. And you can see during live trading room, as soon as a trade gets executed on exchange, you get notified right away. And there's always the recording, right? I don't just send you trades like a lot of people do. I actually spend a lot of time, morning bell and closing bell, explaining every single position, every single adjustment. So I encourage you to try this Elite Circle. All right. Chuck, what was set up on DBX? Yeah, so DBX, the setup was iron condor, similar strategy, but obviously it expires today. Dropbox, my thought process, most of the money is derived by corporations. Corporations are pretty healthy, right? So I didn't think Dropbox is going to have strong positive or strong negative response. So I sold 26.5 call and I sold 21 put. So 26.5 call. I forgot. So I sold 26.5 call. And I should have hedged it. It's a small stock, but I didn't. But anyway, sold 26.5 call spread, probably 26.5 and 28.5 call was, and then selling 21.19 put. This is not a good example because I actually went naked, which is I'm breaking my rule. That's not good. The reason I did it because of the $20 stock. My thought process, even if let's say DBX jumps to 31, right? I'm looking at DBX chart. I mean, they could have had a strong earnings, right? But I looked at, what was the call? 26.5 call, right? So I'm looking at 26.5 call. I mean, they have to be year-to-date high. First of all, I think it's unlikely in them, but even let's say they were at a really good earnings. Let's say they're at $28. Since it's a $20 stock, I'm still within my 2.5% rule, $250. So for that reason, I did not sell. But like on ConocoPhillips, no, you know, it could have. So I did hedge, right? I sold 97, you know, I sold 97 call, and I hedged with 100 call because I don't want to risk more than $300. And same thing with the put. So and same thing, collected 23 cents, 37 cents, 60 cents, $90 stock, 75 basis points. And again, rinse and repeat. You can do it on spiders, you can do it on QQQ, you can do it on stocks that announce earnings, etc., etc. Pelletier, again, you have to be very careful with some of the companies and understand what they're doing, right? Packaged software earnings, I would do it. I would not do it ahead of time, right? You can see how volatile the market. You know, we were up, we were positive, now we're almost positive, right? And we're now negative 2%. So you can see that the pullback might accelerate. So doing ahead of time, I would not do it. First of all, I would be comfortable with the company. I did Dropbox because I understand how they make money. Palantir, you know, I think they're doing this government. First of all, I would read what they're doing and get comfortable with the company and look at their assets. So holding company will engage develop commercial government segments, right? So very hot IPO. They have these contracts with government. And then I would look at the earnings. You know, there are big moves in earnings. So I don't do every single company, but what I would do the day before, do the same thing. I would try to look at estimated move, make sure that within 2 times estimated move, I can collect at least 0.5% of, you know, if I can collect 6 cents on $11 stock and it's 2 times the estimated move, then I would do it. The problem with Pelletier, it's a relatively new IPO, not a lot of historical data. Well, 2 years of historical data. You know, DBX has been around a little bit longer, right? A little bit longer, you know, 5 years. So every time you do these, I usually try to stay away from these high beta flying stocks because they could be up 40%, they could be down 40%. If you're comfortable, take that risk. It's the same setup. The day before, I would do Iron Condor. And the reason I do it the day before, because I want to avoid these large swings. You know, if I do this now and the market drops 5%, well, then I'll be within that 2 times estimated move. You want to trade these premium so you are within the 2 times estimated move analysis. Chuck, trade cash secured puts. You know, obviously I would either do Elite Circle, right? You can see all of my trades. We do have different monthly trader and weekly trader, right? If you want to sell cash secure puts long term, you go to monthly trader, right? You look at this week, you know, Eaton Corporation. There's this high beta, you know, low beta companies paying dividend. You can sell cash secure put on ExxonMobil and Eaton. I still encourage you to read my blog, my view on the market, and again, 4 positions, 2.5%. Right, especially if you're doing cash secure puts, because cash secure puts, if you all of a sudden market drops, right? If QQQ continues this pullback, right, and all of a sudden you're, you know, get a stand on all these puts, you still want to have 50% of your portfolio in cash. So cash secure puts, just remember, you still want 50% of your portfolio in cash after you get a sign on all your puts. Any other questions? All right, guys, you guys been the greatest audience. Thank you for your questions. Again, consider signing up for Elite Circle if you want to trade right along with me. Don't trade on your own. Join forums, participate, ask questions. The worst thing you can do is just trade on your own. You know, so you can do this on YouTube without any financial commitment. You know, on Wednesdays, Or you can join the lead circle and participate, every time and get SMS messages. Please join us on YouTube channel. Again, no financial commitment. You can actually see the live trading room on Wednesdays. And if you have ability to donate to these kids and get these nice signs saying thank you, I would greatly appreciate that. Gate.org. That's all I have for today. Thank you very much and have a great day.